Good morning, traders. It is Wednesday, the 2nd of September, 2022. It's 8:01 a.m. Chicago time. Just a gorgeous day here in Chicago. Um, this is episode number 2349, and guess what? It is Fed Day today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we got today? Today, wow, I look short in this thing, huh? There we go. Maybe. There we go. Today, we have, again, U.S. Fed decision coming out at 2 p.m. Major news event here. And then we have the press conference at 2:30. The expectation across the board is that the Fed is going to look to soften the pace, their expectation for the pace of increases going into December after today's decision. I forgot to bring up the Fed Watch tool. Let me pull that up. This is very important. To show you what the crew in the futures markets, the best markets there are, what they expect. So there you have it. This is what's expected for today. 90.2% expectation that we would push to 375 to 400 basis points. We're currently at 300 to 325, so expecting a 75 basis point increase currently. We can push out in this tool, which is actually pretty cool because it's using Fed fund pricing to determine what everybody's voting for. Check it out. Moving into the December 14th decision, we now have a 4.6% possibility of stopping. So that didn't exist for a while this year. And then we have almost a 50-50 chance of an increase of a quarter to a half in December. This really is what the market is looking at. The market is looking at is a forward-looking mechanism, and it's looking at what expectations are going forward. So we'll see if the Fed agrees with that. If the Fed does not, if the Fed does not agree with that today in their comments, then we're likely to see a little bit of bleeding. The overall posture coming into today is completely mixed. The market is really opening where it closed. We are unched on the prior settlements. This is wrong. Ignore this. Did not update this. It currently it's just sitting sideways. You can see the S&P is balanced. Crude is opening on top of yesterday's balance, really deep in yesterday's balance across the board. European earnings this morning. One of the largest shipping company, in the world, Maersk, came out and it says that it's projecting caution on global shipping. This is really key information. As you know, the price of a container from China to LAX jumped from about $2,300 for shippers all the way up to around, I don't remember the number, like $26,000 to $28,000 per container coming across the Pacific. My father-in-law has to do with logistics, and he was you could see the veins on the side of his head when prices were that high, because much of the product they bring in is from China. He's in manufacturing, so I could tell how expensive shipping was because you start to see veins coming up his forehead and the side of his head when he's talking. But now the veins are going away because shipping prices have plummeted. They're moving back I think I haven't seen where it was. The last I looked, it was like $3,500 or something. So Maersk this is the lifeblood of um, of product around the globe, and this is a strong indication of a recession potential if the largest shipper saying that the logistics side of things is getting very soft. China's refuting the COVID rumors. This is the big drop you saw. It came out and said they're not going to open up and use European standards for managing COVID, that they're sticking with their zero tolerance policy. This is, of course, negative. ADP came out strong this morning. If you recall, ADP is a private payroll processing company that that has a huge portion of the U.S. market. The expectation is 190,000 jobs created in October, came out at 239,000. The prior is 192, and don't forget that the unemployment, the non-farm payrolls and unemployment numbers are this Friday. So there's not a direct correlation, but if the largest payroll processor sees that, it might be an indication of what's coming. So that's it. Fed decision today. Expect a pretty janky market today. And we're expecting the Fed to start downshifting in the pace of increases, which I covered earlier with the Fed Watch tool. Let's turn our attention to the S&P. The S&P is in complete balance on top of yesterday's lower distribution and value after a sell-off yesterday. We'll talk about your votes. We ended up losing on all five positions yesterday. The volume is 205,000 contracts versus 370,000 is the edge of normal. So volume is well contained, and the inventory is plus 40%, which means 40% more volume exists above settlement, has traded above settlement than below. Nothing too radical. What's kind of concerning is that we only have 27 points of range. 27 points of range. This is likely to be a relatively quiet open today based on that forecast. So overall, just a holding pattern. We're likely to make quick moves this morning. I'm looking for the overnight low to be taken. I'm looking for this thing to drop into the 38.44. We'll talk about that in detail. Ultimately, getting down to 38.20. 38.20 is the big number down below on today's release. So we'll see how that works out. Let's take a look at the markets. Here's what we've got. We had a very strong Friday close. We had a completely balanced, I'm highlighting where it opened versus where it closed, completely balanced Monday, and then we opened in a gap higher. Again, you all expected settlement to be higher, despite the fact that in the Trader Bite yesterday, I had talked about how 3,900 is going to be hard for buyers to hold on to. But about 80% of you voted in our polling for charity on those event contracts that we're likely to close above or settle above the prior settlement, which I did not expect. I expected it to really fall back into range, maybe still close ahead of prior settlement, which was much lower, 38.82 or so, but it ended up settling farther below that. So what we had yesterday is a B-shaped profile, quite bearish. Again, we are really having difficulty maintaining 3,900 up here. Every poke of 3,900 is pulled back, right in here, for example. And we remain below, so I'm expecting this thing to continue to explore to the downside, down to, like I said, 38.20 down here is where I expect it to go. This is the top of the prior balance of those 3 days and a key support area, key test area. So we'll see how that works. So this morning, we've got the S&P trading at 38.61 right now, right in value. Right in here, pretty tight value. We're opening in value, in range, in value, and a little bit to the downside. Look for resistance above 38.82. That settlement price, yesterday's value high in TPOs, that area. And we left a lot of single prints up above in the S&P, a string of single prints right here. A lot of resistance, in my opinion. Anything that pushes towards 3,900 is likely to be refuted today. So we'll see how that works out. Overall, where are we? So this is where we are. The last day is fully shown, and then the other days are represented by these little artifacts here, the yellow being the IB. So you can see this is where I'm looking for it to go. Right here. This is where I'm looking for it to test. This was the launch point of last Friday. I'm expecting it to take that back. And if it doesn't hold it, then it's likely to move into the balance down here. And if not, then it's likely to push into lower balance again. And all of those bears that turned into bulls are likely to pay the price. So we'll see how that works today. Let's look at the intraday volume profile chart. The overnight session, again, completely balanced. This profile is completely balanced here, and we're just holding steady, and I'm expecting it to be a slow open. So not much more to say about FOMC day other than it is just not wise to go looking for trades. If you're a trader, so let's talk about expectations a little bit. If you're a trader who comes in and is looking for trades, like the market opens, so you're going, okay, what's going on? Where can I trade? Where can I trade? Just try to listen to that conversation within yourself. If you hear yourself saying, okay, could it's look, it made a double top here. Maybe there's a trade here. If you're doing that, please switch to Please don't trade live. You will lose your money, in my opinion. That's a trader without a plan. The trader with a plan is going to say, here are my key price areas that I've identified. Here's what I expect it to look like when it gets here. And if it does what I expect it to look like, then I act. This is now a trader who's waiting for trades to come to them. That's the mode from which I think a trader can be profitable. A trader who's out looking for scalps, order flow anomalies, things like that as a main bread and butter kind of trading method, that trader is really trading influencer type setups where it's really smoke and mirrors, and not a trader who is sustainably investing. Imagine for a moment, and I'm going to get off my soapbox here. I didn't expect this to be a trade wisdom session, but again, we're going into the FOMC. There's not much for me to say here other than wait for the FOMC. But can you imagine if you gave your account $1,500, $5,000, $10,000, $50,000, $100,000 account, trading the S&P or the micros, hopefully the micros. Imagine if you gave it to someone to trade, and that someone's plan is to just kind of see where the market's at and go by feel and kind of look for certain setups and look for certain configurations. That's their plan. Would you give them your money to trade? If someone is sitting there and kind of trading one way on one day, but they feel a different way on another day, would you give them your money? Imagine a professional investment manager has a plan that says, just do what feels good to you that day. How much money would you invest with them? If the amount is zero, then why are you investing in you trading that way? So for today, most likely it's going to be jacked up and sideways, and there's going to be some delta hedging and a lot of option hedging and option positioning and so on. Maybe even taking opposite legs in the same product and so on and so forth, using different instruments. So to me, it's likely not to yield anything sustainable. And then when the Fed comes in, the Fed generally trades in a quick push. So last time it pushed up, then it pushed down, then it pulled back. So this is leg one, leg two, and then it ripped down. If you recall, it ripped straight down. I think the range was like 39.05, which is close to where we are now. I don't remember, it was like 39.33 maybe, or something like that. That was the initial move. The Fed tends to make a move like this. It does it in three waves. And so you want to see what the big, not the initial move, but what's the more direct move. Does it come back? If it comes back, does it come back to where it interrupted, to the SOC? If it doesn't, then I have a setup to trade in the direction of the initial move, which would have been down last month, right? I think I lost money on the Fed last month, actually fading the move, because I read the move up as the first move. And it's easier to see after the fact, of course. It is best to sit out the 2 to 230 period, and the bigger moves are likely to take place once Powell starts talking about guidance. So the Fed decision is, okay, we increased by 75 basis points. Cool, 75 basis points. So we reprice equities to that. We should have already done that by then. What's important is, again, the market's a forward-looking mechanism, and it's looking for what is Jeremy Powell's expectation going forward, and then it's going to seek to reprice that. That's where the sustainable moves are. So stick to your plan. That's what I'm getting at. Stick to your plan. Wait for trades. Do not go chasing trades, especially on Fed Day. And the expectation is that we are likely to then either stay out of trouble or see some moves that are likely to be sustainable enough, or identifiable enough, I should say, to make some money. So what's expected for today? I'm expecting this low to go this morning. I'm expecting this thing to have an open auction in range, in value. I'm expecting it to try to push higher, and then I'm expecting it to break lower and then just kind of sit sideways until the FOMC comes in. And then from the FOMC, it's either a quick push to 38.20 or a quick push back to that 39.16 area up here, or 20 down here. This is the 38 handle, 16 handle, and then from there, who the heck knows? Okay, so that's what I'm looking for. Really, until the Fed plays out today, it's hard to say what the intent is from the various traders, participants within today's market. So just be patient for the Fed today, and let that decide what we do next. Try to always identify what your risk is before you enter. And that risk needs to make sense. Why should the market pay you for the risk that you take? You need to have a good answer for that. Okay, I'm going to keep repeating that advice because it is what makes or breaks a trader. And hopefully it'll sink in one way or another. It'll sink in, or there'll be enough suffering that it'll sink in as well. Good luck today on the Fed, and I will catch you tomorrow. By the way, the results for the event contracts yesterday: 0 of 5 hits. 0 of 5 hits. We lost on all entries, including crude, which did settle above its prior settlement, but at the entry price we took, because it was so much higher, it missed by a few cents, I think, and we ended up losing on that too. So 0 of 5 hits. The cost to us on the 5 hits was $29.90. That's what we lost for a potential gain of $100. So pretty good R factor there still. And so far, we've either won 4 out of 5 times or 3 out of 5 times pretty consistently. yesterday. This is our first 0 of 5 hits on your poll predictions. Tomorrow we'll run another poll again. We get to do it again. I find these products are so much easier to identify when you look at where are we versus prior settlement. Good luck.